I'm Brad Stone, in for Emily Chang. This is Bloomberg Technology. Coming up, Steve Ballmer unplugged on a range of issues, including his relationship with Bill Gates and the bitter race for the presidency. Our exclusive interview with the former Microsoft CEO. Plus, a switch in controllers at the top of the gaming industry, why Niccolo de Masi is handing over the reins at Glue Mobile. And Google drifts further away from moonshots and dives deeper into the cloud. But can it close the gap with Microsoft and Amazon? But let's start with the top tech stories of the week. First, proxy advisors are split on the Tesla Solar City deal. Glass Lewis came out opposing the acquisition, calling it, quote, a thinly veiled bailout plan. But the earlier Institutional Shareholder Service said the shareholders should vote in favor of the proposed $2.3 billion merger of the two companies. An ISS report says Tesla could bridge the funding gap with cash-burning Solar City. Joining us to break down this and the other top stories of the week is Julie Ask, principal analyst at Forrester, and Bloomberg News reporter Dana Hull, who covers Tesla. Dana, let's start with you. A good day for this Tesla Solar City deal, considering that there are two reports telling investors to do separate things?
Yeah, I think it's a mixed bag, but obviously ISS is pretty influential, so is Glass Lewis. The ISS report came out first, and then Elon was on CNBC saying,
he said
this
he was
is great.
surprised.
I thought they're usually so negative, and then the Glass Lewis report came out. But I think what people should remember is that most large shareholders do their own research, so even though this is significant, you know, the Vanguards and the Fidelities and the Bailey Giffords are likely to do their own research as well.
And where do you think their decisions are trending right now? I mean, Tesla had that surprisingly good third quarter earnings report where they declared a profit, right? And Solar City reports next week?
Solar City reports on Wednesday, right after the election, and then the shareholder vote is on the 17th. It's interesting. I think that most shareholders are long on Elon, and most shareholders are in both companies. So if you're voting against the merger, in some ways you're voting against yourself. It just depends on how long you're willing to wait for true financial success.
Now, one thing ISS did say, even though they were in favor of the deal, is that there was a kind of governance problem at Tesla, that it needed to mature.
I think they called it a suboptimal governance
which is a very Elon way to phrase that.
Yeah.
Do you think that'll have an impact?
Well, I think there are kind of growing calls for the board to change somehow. If this merger does go through, maybe add more independent directors, more women. So it'll be really interesting to see if the merger is approved, if they kind of take those criticisms to task and expand the board. Okay,
Dana, thank you very much. So another company that Silicon Valley is talking about this week, GoPro. Julie, yesterday not a good day for GoPro. The stock went down almost 20% on some lackluster earnings, and yet today, surprisingly, it kind of made up some of that ground. So what message do we take out of that? Do you think that investors think that maybe the drone ends up carrying this company?
So I'd be surprised if that's the case. I think it's a tough market, right? Our Forrester research data shows that only 12% of consumers own any kind of a standalone video recorder. And whether they're selling GoPros or they're selling drones to professional movie producers, is still a relatively niche market.
So any idea why maybe investors weren't as pessimistic today as they were yesterday?
Well, it's hard to speak for investors and what they view as a bargain.
Right. Okay, well, another company, obviously, that had a big week, Facebook. Earnings were great in almost every respect, and yet the stock lost about 8% over the week over this possibility that the company raised that it was running out of places to put ads. How are investors supposed to take that?
Yeah, so I think it's always difficult to say what's in an investor's mind, but I believe that Facebook's still in a very strong position. When we look at the time that consumers spend on mobile devices, Facebook still owns about 1 in 6 of every one of those minutes, or as we call mobile moments, and they're yet to really even monetize Facebook Messenger or WhatsApp or some of their other properties. So I'd be a lot more optimistic about what the long-term upside is. They've got a lot of space to grow into, so to speak. As part of their mobile portfolio.
What about television? The company said this week that it might use its audience network to bring its ads and other companies' ads onto over-the-top services on devices like the Roku or the Apple TV. Could that be a big business for Facebook?
So it's a possibility because Facebook really has two things. So Facebook has a very large mobile audience, which they're doing their best to monetize, but Facebook also has a lot of data about us as consumers, what we like, who our friends are, where we go, and things like that. To the extent that they can use that data to make the advertising more valuable on these other platforms, sounds like a good opportunity to me.
Right. So I want to go back to hardware for a moment, and we talked about GoPro, but overall it wasn't a great week for hardware in the Valley. I mean, you had Fitbit, right, declaring a possible shortfalls in sales over the holiday season. We just reported that the hardware partner at the Y Combinator incubator has left, and Magic Leap was making an augmented reality system down in Florida. It's lost its chief marketing officer. Can you connect the dots here? What is happening among these smaller hardware makers?
So I think it's always, first of all, hardware is always very difficult to do, and it's very hard to make money just doing hardware. And there's a few factors in play there. And the other part of it is too, is when consumers buy one of these devices, they have this expectation of an outcome, right? So even if you ship a piece of hardware, you're constantly in the mode of shifting software updates and services and trying to help consumers get that outcome that they expect. I think when we look specifically at Fitbit, and we look at what we're forecasting over the next 5 years, we're not really forecasting much in terms of increased sales. While the overall market is going to double from about 1 in 6 consumers having a wearable device today to 1 in 3, smartwatches are going to capture the vast majority of that upside here over the next 5 years. And they're actually preferred by Gen Y and some of the younger consumers coming into the market.
So quick last question, what's the future for Fitbit? Can it exist as a standalone company?
So the big opportunity for Fitbit is if at some point insurance companies either mandate that each of us wears one of these devices or gives us some huge financial benefit for doing so, and there's just more in it for the consumer. But no, I don't believe there's enough self-motivated consumers to make this a much bigger market.
Okay.
Flat out.
Julie Ask, principal analyst at Forrester, and Bloomberg News reporter Dana Hull, thank you both very much. Up next, a shakeup at the top of hit mobile game maker Glue Mobile. Niccolo De Masi tells us why he's stepping down as CEO. This is Bloomberg. A shakeup in the world of mobile gaming. Glue Mobile's longtime leader, Niccolo De Masi, is handing over the reins to former EA Studios exec Nick Earl and assuming a new role as executive chairman. Glue Mobile is the creator of the popular game Kim Kardashian Hollywood. It's been downloaded more than 45 million times since its introduction in 2014 and still generates millions in bookings for Glue. But investors have grown antsy, wondering when Glue will be able to recreate a hit on that scale. Glue Mobile chairman Niccolo De Masi joins us now in the studios. Thanks for joining us.
Pleasure to be here.
So this leadership transition, why have you handed over the steering wheel to your colleague?
Yeah, we made 3 big announcements today. The first one is obviously on my hand-picked successor and my own succession plan. The second one is obviously the appointment of Nick Earl, and the third is actually our acquisition of a new exciting business called CrowdStar.
And let's get to that in a second, but...
Yeah, I mean, the transition really, it's entirely my own instigation. I've run Glue for 27 quarters, 7 years, and we've done a lot of great things. When I joined Glue, we had $14 million of net debt. We had maybe $60, $70 million of revenue. So we've quadrupled revenues. We've built the balance sheet up to $140 million of net cash. But at some point, you sort of recognize that life is full of beginnings and endings. And for me, as Glue's second biggest shareholder on the board, I recognized that we needed to find more of a product-centric leader for the next stage of growth for our business. So I actually sort of worked backwards a few months ago from, well, what do I do to make my shares more valuable, and what do I do to bring Glue to the next level? And I sort of went, well, we need more creativity in the CEO role to be closer to products, particularly in a world where you're making fewer, bigger bets. If you're going to take fewer, bigger bets that are more expensive, more complex, higher quality, the CEO's got to own every one of those product decisions, and that's really one of the biggest drivers. I mean, the second reason for it, obviously, is I'm going on to a different opportunity, different sector, with Andy Rubin at Playground.
Yeah, that's the Android creator at Google. Why don't you just tell us briefly, what are you going to be doing with Andy?
Well, it's a stealth mode startup. What I can say at this stage is it is the biggest bet that Andy and Playground are making as an investment vehicle. It's an incubator and venture.
Can you give us the field? Is it virtual reality? Is it
give you the
artificial
field.
Intelligence?
It's hardware. It's hardware. That's what I can sort of say at this moment. It will be, there'll be a lot more information coming out on this in December. It's the only business Andy Rubin's personally the CEO of. I'm actually joining as the president. So it's a big statement of how interesting this is.
Can
I'm
you
giving
tell
up
us the name of the company?
Not quite yet. Wait a couple weeks or a month or two. The reality is I'm giving up a public company CEO role to be the president of this with Andy because we're a complementary fit. So
we'll look forward to hearing more about that. But now Activision recently reported earnings, and they were lackluster at King Digital, its mobile gaming division. Is there any secular troubles here, or people turning away from mobile games or games like Pokemon? Is that impacting Glue?
Yeah, so I think it's fair to say that the world's gone mobile. 2 or 3 years ago, the App Store was entirely a game store in a lot of ways. And what's happened today is, Facebook's moved its revenues from, web to almost 100% mobile now, and they're doing very well with that strategy, and we're partners of them. Today, the App Stores reflect all of entertainment and all of life. You have social networking, you have video, music, dating, gaming, and it's certainly getting harder to get a top grossing spot that lasts, because the products that do it are becoming really just platform products. Spotify is a platform for music. Hulu is a platform for video. So what Glue is doing, I think this is true for the whole sector, is trying to make increasingly platform bets with the new products we build as well as our acquisition strategy. And that's what we reflected this morning in our CrowdStar acquisition as well. It's a bet on platform products.
Yeah, tell us what CrowdStar is and why you acquired it.
Yeah, so CrowdStar is based in Burlingame, California. It's near our headquarters. They're the leader in the top grossing fashion app, actually. So today, Glue owns 3 or 4 games in the top 100 grossing. Kim Kardashian, Hollywood, of course, our Tap Sports baseball product. Covet Fashion is the #1 fashion app in the store. And what's exciting about it is it's a platform product. So what it does actually is it allows you to interact with any article of fashion, high branded fashion, through this. There's a community whereby you're competing with other people to create the best look. What is the best, cocktail outfit? What is the best beach wedding outfit, etc. And it's platformized the entire fashion world in a gamified setting. We have a home game launching with our new CrowdStor colleagues, actually not too long out, between now and Christmas. We think they could do the same thing in the home design category. So the future of Glue is very much going to be about these platform bets. What can we do to actually build out evergreen properties that fundamentally never go away? We want to hold one of those top grossing spots, never have it diminish, and that means you've got to go after big categories: fashion, home, celebrity, social networking, music, TV, etc.
The celebrity category, obviously one that you've had a lot of success with, but how have other celebrities managed to replicate what Kim Kardashian did with the Hollywood game?
Yeah, it's a good question. I mean, I think it's fair to say that in the game space, replication is difficult in a traditional hit-driven model. We've had success, we've had not success with that model. What we're moving to is a platform approach. So you're going to see with our next Taylor Swift game, which comes out next year, that will be a platform product. You're going to see a platformized version of a game coming out with our Nicki Minaj game probably before Christmas. And you're going to see more and more of this platform thinking come into the entire Glue roadmap the farther out that we get.
Okay, Nicola, last question of vital importance to the audience of Bloomberg Technology. Kim Kardashian on social media, right? She hasn't, as I understand, I'm not a huge follower, tweeted or interacted with her supporters or fans since she was robbed in Europe recently. Right. How long will that last, and when will she return?
I don't know exactly when she's going to return. I've said in other news outlets that I'm certainly optimistic she will. I think the world would miss not having a Kim Kardashian involved through social media. She's very much the pioneer of this. I am in touch with her, so our game is going on and it is being updated, and there is a roadmap of updates which she's approving.
Was her departure related to the theft? Was this taking a break from all public interaction?
Well, I don't think I'm in a position to comment on that, whether or not I know the answer to that. Ultimately, she's a consummate professional. I think it's been a traumatic event, no doubt about that. I'm sure there's all sorts of investigations going on about that. And I'm sure she's thinking about whether or not that you should be rejiggering how you use social media in the future. But the important thing for Glue, which I want to be clear on, is that the game contract goes on for many years. Kim's been a great partner. She's going to continue being a great partner. And we have no holdup in our ability to put out updates with her approval. Okay,
Nicola Damasi, Chairman at Glue Mobile, thank you and good luck with your transition.
Thank you. Pleasure to be here.
Coming up, former Microsoft CEO Steve Ballmer opens up about his frayed relationship with Bill Gates, plus his thoughts on the presidential election and which candidate has the better tax plan. Don't miss our exclusive interview next. This is Bloomberg. Former Microsoft CEO Steve Ballmer has opened up on his strained relationship with Bill Gates. He says it was his decision to move into smartphones that led to the relationship breaking down. Ballmer revealed the details during an exclusive interview with Emily Chang on Bloomberg Studio 1.0. Take a listen.
People like to focus in on Bill was CEO, you were CEO. This was kind of like my baby and Bill's baby, and we were growing it and nurturing it. He was kind of like the senior partner. I was the junior partner. If it's in the raising of children, I would say he was more, mom gets to decide more than dad. But, so I take great satisfaction in the things we accomplished throughout the time, not just when I became CEO. When I became CEO, we had a very miserable year. Bill didn't know how to work for anybody, and I didn't know how to manage Bill. I'm not sure I ever learned the latter. Things lightened up some, and then I would say my life changed a lot in 2008 when Bill actually left the company.
How so?
At that, Bill had asked me, he said, look, I'm happy to help you anyway, but I don't want you to need me, so I can come and go if you want me, great, but I have another life. And in a sense, I finally felt like, okay, we're not partners anymore. I have to take accountability. And I think I probably did some of my very best work at the company after Bill left, actually.
Really? Like what?
Pushed us into Bing, sustained that investment. That's really where we got into the cloud. We started what's now Office 365 in Azure. After Bill left, we pushed into the hardware business with Surface, et cetera. And now Satya Nadella, my successor, is sort of taking things there to infinity and beyond, if you will.
How do you feel about being asked about your successes and your failures? What you're most proud of? What you're least proud of?
At this stage, I'm almost 3 years out. It's ancient history. Did I, have a lot of success? Yeah. Are there some things I wish I'd done differently? Of course. I started a company that had about $2.5 million of revenue and 30 people, and I left a company that had $22 billion in profit, and I feel like that net, pretty good success.
What's your relationship with Bill like today?
Yeah, we've kind of drifted apart. He's got his life, I sort of have mine. Microsoft was kind of the thing that really bound us. We started off as friends, but then really got quite enmeshed around Microsoft, and since I've gone, we really have drifted a little bit.
He wasn't happy about when you left suddenly, or, what really happened?
Well, it was definitely not a simple thing for either one of us. I think that at the end of the day, there are probably two things. A little bit of a difference in opinion on the strategic direction of the company, which I think is a challenge. And then number two, he and I had kind of always had what I would call brotherly relationship in the good parts and the bad parts, and I just think towards the end that was a bit more difficult than not, particularly with the strategic direction change, and the stock price wasn't going anywhere, so the rest of the board felt pressure, despite the fact that profits were going up. So I think you had kind of a combustible situation. And
does it ever bother you you don't get credit for that?
Sure and no. At the end of the day, I have the great sort of comfort of knowing what I did and feeling good about myself, and everything else doesn't really matter.
Where did you want to take the company? Where did he want to take the company?
I think there was a fundamental disagreement about how important it was to be in the hardware business. I had pushed Surface. The board had been a little reluctant in supporting it, and then things came to a climax around what to do about the phone business.
Satya Nadella was on stage recently where he said missing the mobile phone was one of the biggest mistakes in Microsoft's history. What would you have done differently?
I would have moved into the hardware business faster and recognized that what we had in the PC, where there was a separation of chips, systems, and software, wasn't largely going to reproduce itself in the mobile world. I wish I'd thought about the model of subsidizing phones through the operators. people like to point to this quote where I said iPhones will never sell. It was because the price of $600 or $700 was too high, and there was business model innovation by Apple to get it essentially built into the monthly cell phone bill. We should have been in the hardware business sooner in the phone case, and we were still suffering what I would call some of the effects of our Vista release of Windows, which sucked up a huge amount of resource for a much longer period of time than it should have because we stumbled over it. And when you have a lot of your best engineers sort of in a sense being non-productive for a while, it really takes a toll.
Would you have bought Nokia?
I certainly wanted to buy Nokia. The board at first disagreed with that and then came back and said the company should go ahead even though I had decided to leave. I think it was, if executed in a certain way, I think it made a lot of sense. A company chose to go another direction, and that's the decision the company made.
Do you think they're wrong?
I see the stock price flying sky high, and all you can say is that the market certainly agrees with the direction Satya's taking the company, and I'm super excited about that.
That was former Microsoft CEO Steve Ballmer speaking with Bloomberg's Emily Chang. More of that exclusive interview later in the show. Coming up, Google is ramping up its cloud ambitions and investing in the company that owns Snapchat. What's the search leader up to? More on this story next. This is Bloomberg. This is Bloomberg Technology. I'm Brad Stone in for Emily Chang. Google is diving headfirst into cloud services. The tech giant's share of the public cloud market has more than doubled since the second quarter of 2015. This according to estimates from Synergy Research Group. Despite those impressive gains, the company still comes a distant third behind Microsoft and Amazon in the public cloud market. Joining us to discuss is Bloomberg technology reporter Mark Bergen, who covered the story in the latest edition of Bloomberg Business Week. Mark, thanks for joining us.
Yeah.
In the story, you said that board member Diane Greene last November, when she joined the company to run the cloud business, was given a blank check. So what is that blank check bought?
Yeah, she's gone and overseen at least 4 acquisitions, one of which Apogee was a couple months back, is $625 million. So essentially, she's kind of building the pieces to compete with Microsoft and Amazon. And Google's in an odd position here where they're pretty far behind. Not something they've historically
They've moved the needle, but significantly yet?
I think so. The story is that they're late to the game. They've had the pieces in a long time. That Google was arguably the pioneer in cloud technology that they built in-house, but hadn't really taken it to a market. And Amazon did that first. They've made a lot of traction. There's a lot of people in the industry really like Green and really trust her, but they also think that Amazon just has this big first mover advantage.
I have to say I was surprised by a line in your story that a significant chunk of the Google cloud revenue comes from just 2 customers. Apple, which is unbelievable since Apple's maybe Google's biggest competitor, and then we'll get to it in a second, the company that owns Snapchat, Snap.
Mm-hmm. Right.
Just those 2 companies. Is that a majority? Do we know?
We don't know if it's a majority. They signed some big customers lately. There are some customers that they claim they've had, but just can't come out. Home Depot is one. Evernote is another on the cloud side. I think they've had difficulty getting a lot of customers because Amazon just has a lot of advantages with scale, with ease of use, and their developer tools are just a little bit more familiar.
And they have to worry that both Apple and Snap would eventually want to move off their cloud and do it themselves.
Right. We've done some reporting that Apple's actually working on that. They have a secret project. They not only Google, they also give money to it seems like Microsoft and as well possibly Amazon, kind of hedging, putting their money in different baskets.
Now we learned today that Google Capital, renamed strangely Capital G. I don't know. Tell us what's behind that. But they have invested in Snap. Is this the enemy of my enemy is my friend strategy?
Yeah, I have no insight of their branding strategy at all. But the Snap investment was sort of, they just disclosed it on their website, the small logo. And they've had, the companies have, Snap clearly was an early startup. Google won that contract in the cloud business, maybe not foreseeing the tremendous growth that Snap would become. And they're also an interesting company in some ways because a lot of Snap's content is not on the mobile web. It's not really searchable.
And Google has tried to buy Snapchat in the past.
Right. I mean, it certainly fits with their portfolio. They don't have anything on social. They've tried it, with Google Plus. It's generally considered a failure. They're certainly kind of kicking the tires with Twitter. And Snapchat is one. We've talked a lot about Facebook and Google are sort of dominating the digital advertising. A lot of people in the ad world say, well, there's Snapchat, which could easily become the third player there.
So shifting topics, but staying on Google, we recently, when they reported their quarterly earnings, learned something new about their hardware business. They've started reporting an inventory item. What did we learn exactly?
Yeah, right now they have 559 million of cash on hand, which is basically the hardware inventory. So that's not just Google, which is the new Pixel phone and the home speaker device. It's also the entire Alphabet, so that includes Nest, right, which has thermostats, and they've not really disclosed anything about the sales for Nest. We still don't really know numbers on hardware sales or even how the liability costs. So it's just a small bit of detail, but the company historically doesn't really give much.
What'll be interesting is next quarter when we see the same number and we can tell what kind of direction it's gone.
Right, and clearly, the profits for hardware might be pretty. I think Google's shooting for Apple-level profits. The same with the cloud business. We don't know what the profits will be, but they're probably not going to be as great as search.
Right. Well, last topic then, Europe. I mean, Google has struggled, or we should say Alphabet, has struggled in Europe for a long time because they have some serious antitrust scrutiny, and they finally responded to the EU's latest antitrust complaint. Tell us a little bit about that and whether they are kind of turning the tide on that battle.
Well, they're not backing down. Their response was pretty strong. This was kind of around both the shopping, which has been the longest case out there pending, as well as new charges around advertising. And that their case is being made is that the EU doesn't really understand how consumers shop. And the argument they've always made is that if you look at the shopping service, which is the first target of the EU lawsuit, eBay and Amazon are actually far bigger, both in the States and in Europe. Not many people even know that Google has a comparative shopping service.
I find that argument to be fairly credible. I don't think of Google having a monopoly on search at all. A lot of people start their searches on Amazon. It seems to me that there's maybe a stronger argument to be made on mobile phones and with their strength on the Android.
Yeah, I think they're much weaker on the Android argument, and that's where it's going to hurt them a lot. If they have to make some structural changes there on Android, they pre-install about 11 different Google apps. If they've in Europe, which is a huge market, they can't do that anymore. That really probably hurts their bottom line.
And quickly, that's a separate case. Is Marguerite Vestager, the head of the Antitrust Commission in the EU, is she pressing forward in that avenue as well?
She's kind of as far as I understand, keeping her deck close to her cards, close to her deck, or something like that. But she's pressing forward on all of them, and it sounds like she's pressing forward them on all of them together to have a really strong case.
Well, great. Mark Bergen, Bloomberg News technology reporter, thank you for joining us. Coming up, the new funding platform giving boost to female-led businesses. We'll hear how Albright co-founder Debbie Waskow plans on leveling the playing field next. This is Bloomberg. Funding platform Albright is looking to provide a boost for female-led companies. Recently launched in the UK, the company plans on combining an angel network with crowdfunding to provide capital for female entrepreneurs. Bloomberg's Carolyn Hyde spoke with Albright co-founder Debbie Waskow and asked why there's a need for a fund like this.
There is a huge global funding gap for women. So globally, only 10% of all capital invested is in a female-led business. And on the other side of the table, only 7% of people investing and 14% of angel investors are women. And so Anna Jones, the CEO of Hearst, and I have co-founded Albright in order to address that funding gap.
How much is 10% out of kilter with, say, how many businesses are actually out there led by female entrepreneurs at the moment?
So a few stats on that. The first, which is really interesting, is that in the US, you're twice as likely as a woman, any woman, every woman, to found a business as you are in the UK. So something in the UK is particularly out of kilter. And when we've tried to do our research on why this is that women are not founding businesses at the same rate as men, it's a complicated problem to unpick. And the thinking behind Albright is there are two parts to this. The first is access to capital, and that's why part one of Albright is a fund, a traditional venture capital fund. But part two is a crowdfunding platform where you're able, as someone who's watching this show, for example, to invest individually and perhaps small sums of money in female-led businesses. And that's the way we think we're going to get the volume of investments made that need to be made to change the conversation. But the second part of the picture is it's partly about access to capital, but it's also about culture change. And when you talk to women about why they don't found businesses, lots of different pieces of feedback come back. It's about confidence. It's about coaching, mentoring, network. It's about appetite for risk. And so when we have addressed that need and developed the foundations for Albright, it's about money, but it's also about the academy.
And this is something that is focused on UK female entrepreneurs, but how global in perspective is this fund, is this group of angel investors, is this crowdfunding as well?
Well, we started to focus on the UK first because we have a singular objective that's going to keep us busy to begin with, and that is how do we make the UK the best place in the world to be a female founder? How can we change those numbers? How can we create a different kind of environment? And so from the entrepreneur perspective, we're completely focused on UK businesses to start with. From the investor perspective, you can invest in the fund or in the Angel Crowd Network wherever you're based. It is an EIS-driven fund. That means that there's a tax relief available to UK taxpayers or indeed people who own assets in the UK. And we've found that this has meant that there's a very global traction to this topic of investing in women. And I tell you why. It is about purpose, but it's also about profit. Women get 35% better returns than men, female-led businesses, even working off that small 10% sample size. So where we found real engagement is, yes, this is a purpose, mission-driven story. It's about create more female entrepreneurs, but it's also a very financial-driven story. It's about get great returns on your investment.
That was Albright co-founder Debbie Waskow speaking with Bloomberg's Carolyn Hyde. Returning back to our exclusive conversation with former Microsoft CEO Steve Ballmer. In part two of the interview, Bloomberg Technology's Emily Chang dives into the upcoming presidential election. She starts by asking Ballmer why he's been so optimistic about the government and where he stands right now in terms of his political affiliation.
It's interesting to hear you be so optimistic about the government, given the presidential election that we are currently in right now. I know you typically vote Republican. What is your thought on this?
I've never said that, and that I am a definite independent. I'm not registered with either party. I am an independent. I care about issues deeply, and I'm willing to vote for anybody who shares my interest.
What do you think a Hillary Clinton presidency would mean for innovation, jobs, the economy? What would a Donald Trump presidency mean for those same things?
I've read their tax plans. I think that at the end of the day, neither one of the plans have much to do with job creation, frankly. I actually probably am a little less convinced that federal government action or local government action has anything to do with job creation. I think job creation comes out of productivity gains, which comes out of innovation.
Do you think that this election has become too much about not the issues and not enough about what's important?
Number one, I think this election's become a lot about personality. And I'm sure that should always be a little part of things, but I think on both sides, that's really been blown up.
We've seen so many people in Silicon Valley and the tech industry come out saying that they are against Donald Trump. They are voting for Hillary Clinton. Why not be more public about it?
I would advise most CEOs to keep their political opinions to themselves.
Why?
They're going to be running their businesses under either administration. Their shareholders may not agree with their views. Companies should represent the views of their shareholders, and whatever happens, probably at least 40% of people will vote for either of the two candidates. So I don't really think that that's a good thing to do. Companies should stand up for their issues, but I don't think they should pick candidates, or at least I wouldn't want a company in which I am an investor to do so. As a private citizen, I'll vote my mind, but the thing I'm going to emphasize is the issues I care about and the facts.
Former Microsoft CEO Steve Ballmer with Bloomberg's Emily Chang. Don't miss the full interview on Bloomberg Studio 1.0 this Sunday at noon New York time. Also available as a podcast on iTunes and SoundCloud. And speaking of the election, join us Tuesday for full coverage as the polls close across the country. Bloomberg's David Gura and Washington Bureau Chief Megan Murphy lead the discussion starting at 7 p.m. New York time, 4 p.m. in San Francisco on Bloomberg TV, Bloomberg Radio, and Bloomberg.com. But next, the rise of the machines is coming to a hotel near you. We'll hear from the startup using robots to deliver room service next. This is Bloomberg. One stock we're watching, SoftBank, the Japanese tech conglomerate, is set to report second quarter results after the close of trading in Tokyo Monday. Analysts are expecting the company to post single-digit declines in revenue and operating profit. But investors will also be listening closely for more details on CEO Masayoshi Son's investments, from the $32 billion deal to buy the chipmaker ARM to an ambitious new $100 billion tech fund. Silicon Valley startup Savioke's Relay robot is already active in thousands of hotels. Bloomberg Technology's Ian King looks at what robot room service means for the future of hospitality and the high-powered computing that will power it.
Good afternoon, guest services.
Yeah, this is 1204. I wonder if you could send some items up to my room, please.
Cheetos,
Some Kraft macaroni cups.
Pepto-Bismol, anything else, sir?
And some Tresemme hairspray, please. Thank you.
Think about, the way that the world has changed over the last 5 years in terms of being able to get things to your home or get things to your office. Relay is the last 1,000 feet.
Intel, the world's largest semiconductor maker, sees a future in delivering bags of Cheetos to hotel guests. It's one backer of Savioke, a San Jose startup that's deployed delivery robots in several Silicon Valley area hotels.
We look at this as the first step in autonomous delivery. In the 20th century, I would have said we're moving mail. In the 21st century, it's packages, but it's also coffee, it's also equipment that needs to be repaired, it's whatever needs to move around in your space.
While the little robot seems like it's performing only rudimentary tasks, there's actually a lot of heavyweight computing going on under the hood, as it literally finds its own way around.
Think about a blind person navigating through a hotel. They're going to have a white staff and they're going to feel for the walls. Relay has a map of where it's going, so as it goes along, it's feeling the walls, so to speak, but with a laser instead of with a white cane. We added the eyes, so it has a little bit of a life to it. There's a very subtle curve underneath that's sort of a smile, and that's just designed in. It's surprising to me how many people don't even give it a second look.
They're concerned that, the robots are taking over, replacing people's jobs, that kind of thing.
I think it reminds them of TV shows that they've seen in the past, like Rosie from the Jetsons or R2-D2 from Star Wars.
R2, what are you doing here?
Technology's gotten to a point where robots can make sense of the world in real time. If the robot can see the world, process what it's seeing, and make a decision, then it can be around us.
And that's what's got technology companies excited about the robot market in general. If they're built so they can work with people and are safe to be around, then their use can take off.
Bloomberg's Ian King joins us now with more. Ian, I noticed you didn't tip the robot.
The hairspray didn't work out how I was hoping it would, so, I changed it.
Yeah, that was a good order. Now, I think I read that it was in thousands of hotels. It's actually, to correct the record, much smaller than that, right? Is this just a novelty, a proof of concept, or does Intel and Savioke see a real market here?
I mean, there's two things at work here. It's done tens of thousands of deliveries, done it successfully. Savioke see a business as a service. They have a limited number of these things that they're supplying to hotels, and they're supplying it as a service which they manage through the cloud. For companies like Intel, it's a whole different thing.
They want to put chips in the...
Yeah, I mean, it's basically a computer on wheels. Obviously, their key market, computing, is slowing down, so they're looking for new places where they can put those chips.
Now, if I'm ordering room service from a hotel, I want my club sandwich and a soda, or your continental breakfast. That's not fitting in the Savioke relay robot.
Not really, no. It's basically like about the size of a plastic ice bucket, and you can just put in items that, can take that kind of an environment that, don't need to be level or anything particularly.
Were you impressed by this robot?
I was. I mean, as you know, I cover hardware, and I'm obsessed by the technology that's going on behind the scenes. And if you look at that, it's pretty good. It's pretty good what it does. I tried to get it to run me over. It wouldn't. And
you said it does a happy dance at the end.
It does, yeah. I mean, you rate it like you would your Uber driver, and if you give it the maximum number of stars, it does this little jig and sings a song.
All right, I'm looking forward to getting one in the office. Okay, Bloomberg's Technology's Ian King, thanks. That does it for this edition of Bloomberg Technology. Don't miss former Microsoft CEO Steve Ballmer on this week's episode of our long-form interview show, Bloomberg Studio 1.0. That's this Sunday at noon New York time and available as a podcast on iTunes and SoundCloud. Remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays at 6 p.m. in New York, 3 p.m. in San Francisco. That's all for now. This is Bloomberg.